Good day, ladies and gentlemen. On behalf of Ventura Securities Limited, I welcome you all to 20 Microns Limited Q2 and H1 FY25 earnings call. The company is today represented by Mr. Atul Parekh, Chief Executive Officer and Managing Director. I would now like to hand over the call to Mr. Parekh for his opening remarks, post which we can start the question and answer session. Thank you, and over to you, sir.
Good afternoon, everyone. A very warm welcome to the Q2 and H1 FY25 earnings conference call of 20 Microns Limited. I would like to start with a brief introduction of our company. 20 Microns Limited is a pioneering leader in the industrial minerals sector in India. With over 3 decades of rich experience, we have been at the forefront of revolutionizing mineral micronization in India with a systematic approach. Our diverse product portfolio encompasses a wide range of non-metallic industrial minerals such as calcium carbonate, talc, kaolin, mica, quartz, dolomite, natural red oxide, along with various other specialty chemicals and functional additives, including mineral-based fertilizers, construction chemicals, and many more. Our robust infrastructure includes 9 state-of-the-art manufacturing facilities and warehouses across India, strategically located in Gujarat, Rajasthan, Tamil Nadu, and Andhra Pradesh. This network provides us with a combined manufacturing capacity of more than 450,000 metric tons per annum. We also have 5 different captive mines in India with a total mining reserve of approximately 170 million tons. Our products serve as essential building blocks across various different industries, including paints and coatings, plastics and rubber, paper, tires, ceramics, and many more. We currently support a diverse global customer base spanning over 65 countries and more than 200 clients from a wide range of sectors. Our clients include esteemed companies such as Berger Paints, Asian Paints, Kajaria, Pidilite, L&T, Kansai Nerolac Paints, Finolex Pipes, ONGC, JK Tires, ExxonMobil, and many more. A core driver of our future success is our steadfast commitment to research and development. We make significant investments to foster a culture of innovation, continuously exploring new possibilities. Our dedicated R&D team of 45 to 50 professionals focuses on developing a broad range of products at our in-house facility in Vadodara. 20 Microns remains resolute in its mission to deliver high-quality products and pioneering solutions. Through continuous R&D initiatives and close collaboration with both domestic and international clientele, we consistently enhance our product portfolio to meet the needs of the diverse markets. Now, moving on to the financials, in Q2 FY25, our company has delivered a solid performance with a revenue increase of 20.3%, reaching rupees 2,401.8 million rupees compared to 1,997 million rupees in Q2 FY24. The company witnessed healthy revenue growth during Q2 FY25, largely supported by a strong demand across our key product segments. For H1 FY25, the revenues grew by 20.6% from 3,902 million rupees in H1 FY24 to rupees 4,707 million in H1 FY25, showcasing a sustained momentum in our core business operations. Further, the EBITDA for Q2 FY25 stood at rupees 308 million, reflecting a growth of 3% over the same period last year, while H1 FY25 EBITDA grew by almost 8% to rupees 608 million. While there has been a slight reduction in the EBITDA margins, this is attributable to external factors, specifically the rising costs associated with our raw materials, rent, and transportation. Our PAT increased by 2.5%, reaching rupees 164.5 million compared to rupees 160.5 million in Q2 FY24. For H1 FY25, the PAT increased by 10.9%, amounting to 343.5 million rupees compared to 310 million rupees in H1 FY24. Our business performance in Q2 and H1 FY25 has remained quite steady, showcasing resilience in the face of external challenges. The extended monsoon season during Q2 also led to temporary disruptions in the demand. However, our diversified portfolio and robust market presence helped us to mitigate the impact, ensuring that we are on a steady growth path. As a result, we maintained a positive growth trajectory, navigating through short-term obstacles while continuing to focus on long-term stability. Looking ahead, we are optimistic about the second half of the financial year as well, which is expected to maintain the consumption across key industries, and we anticipate a constant progress in demand in the coming quarters, especially in the domestic market. In summary, 20 Micron's future looks quite bright as we focus on innovation and strategic alliances. We are well prepared to capitalize on the numerous growth prospects that await us and are confident in our ability to expand our operations while providing value to our stakeholders. We thank our board, management, employees, partners, and shareholders for their unwavering trust. Together, we plan to deliver a solid performance and a reliable growth for 20 Micron. I thank you for your time, and I am happy to answer any questions that you may have. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. First question comes from Agastya Dev from CAO Capital. Please go ahead.
Hello, am I audible?
Yeah, you are.
Thank you very much, sir. Thank you for doing the conference call and giving me the opportunity. Clarification on the management that you have given. You that there were some external factors due to which the EBITDA margins were I understand the nature of these pressures, cost pressures, but can you quantify the impact that we saw during the quarter? And the second question, very similar question. So you have mentioned that in the second half you'll see there is a chance of improvement in margins provided the demand remains stable. So are these cost pressures expected to reverse? Is that the reason? Or because of higher demand, do you expect better margins because of operating costs, and these cost pressures are expected to continue for a longer duration?
Yeah, thank you for your question. When we look at the external factors, we verify that 20 Micron imports quite a lot of raw materials from overseas, and due to the higher freight costs for the incoming raw material at certain times from certain territories that we import from, this and building up on certain inventories for the raw materials is where the cost pressures build up, which do not get translated in terms of the price increase that we receive from our customers at times for certain product ranges that we carry. So definitely this is one of the factors, along with certain transportation costs which have also increased due to the increase in the sales that we have seen in the past half a year. So this cost pressure definitely would continue to build up because we do see a demand which is going to be present there, but the uncertainties definitely will continue. So there is no surety as to how the demand will peak and not peak in the coming quarters. But we are ready to, with the inventory that we are carrying for the raw materials, to build up on the product range to service our customers for the demand that might be created in the coming quarters.
And sir, can you quantify the impact that we saw during this quarter?
That I do not have in hand right now, but we will get back to you.
All right.
Yeah, sure.
All right. And sir, just a second follow-up. The 15 to 18% growth number that you are, what kind of surety to confidence level in that guidance?
Yeah, so currently, if you notice, we are growing at 20% in the first half, and generally, Q3 is quite sluggish due to the festive demand which is there and the holidays which are there. So due to that, we have put up a 15 to 18% growth rate, which we will hopefully achieve looking at the current scenario.
I'm done.
Thank you. Next question comes from Rajesh Sharma from VS Capital. Please go ahead.
Hello, sir. For the opportunity, I just like last you had mentioned date on the current status of APV product. Like the recent research information.
I'm sorry, can you repeat the question? Your voice is breaking up.
So, last mentioned about understand the current status of EV product development, including any collaboration.
Yeah, so regarding the new developments related to EVs and batteries and semiconductors, it's still ongoing, and it will still take some more time for us to develop those kind of products, because they are very niche products, and they need specific types of raw materials which go into developing these kind of products. And we are working with international labs to create the right products for the Indian markets and the global markets. And so it's still in the R&D phase, and will take a couple of more quarters before we have something ready in the lab to announce it.
And looking beyond the current
yes, sir, it will go beyond the current financial year. Yes.
Current financial year, what are the long-term goals? Are there any plans for development?
I'm sorry, your voice is really cracking up. I'm not able to hear you well.
Is it funny?
I'm sorry to interrupt, sir. Your voice is not clear, sir.
Am I audible?
Yes, sir. Please go ahead.
Current finance.
I'm sorry to interrupt, sir. Your voice is not clear. Please come back in the queue, sir. The next question comes from Suksha from Ratnatraya Capital. Please go ahead. Sorry to interrupt, sir. Your voice is not audible. The next question comes from Divya Daga from Visit Global Securities. Please go ahead.
Hello.
Divya Daga, please go ahead.
So,
Ma'am, please go ahead, ma'am.
so can
You're audible, ma'am. Please go ahead. Ma'am, I'm sorry, ma'am, your voice is not audible. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Question comes from Rajesh Sharma from VS Capital. Please go ahead.
Hi, sir. Am I audible now? Is the line clear?
Yes, sir. Please go ahead.
Yeah. So just wanted to understand, looking beyond the current financial year, what are the long-term goals for the EV product line semiconductors? Is there any timeline that you can, tell us about?
Are you asking specifically related to EV?
Yeah.
So the EV is a very new concept, and there are no direct products which go into the EV market for 20 microns. We have to supply to the allied industries which supply to the EV industries. So it could be the battery industries or the semiconductor industries which supply to the EV industries. So there are no direct products which go into the EV. So we are working on developing products which go into the semiconductor industry or the battery industry, but they are certain specialized products and raw materials which are required for this kind of product development. So we are working with international laboratories and international different consultants who are guiding us in terms of the product development. So it will take some more time. There is no specific time limit in this particular reason, because anyways the demand is still not there in the Indian market for these kind of products. So we are trying to look at international products and try to develop these kind of products within India.
Got it, sir. Okay. Thank you, and wish you all the best, sir.
Thank you so much.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Question comes from Tanya, an individual investor. Please go ahead.
Am I audible?
Yes, ma'am.
Hello, sir. Good morning. Congratulations on the set of numbers. So I have first question regarding, could you help me with the revenue mix for H1FY25 in terms of the industry that we cater to?
So typically in 20 microns, if you look at our typical product mix, which has already been mentioned in the annual report, even in H1, the product mix remains the same, where we cater about 51% to the paint industry, about 22% to the plastics industry, about 7 to 8% to the rubber industry, followed with the other smaller industries that we cater to. And also in terms of the product mix, calcium carbonate still holds 50% of our overall revenue, followed by 20% of kaolin, 10% of talc, and remaining all the other products.
Thank you, sir. So since paints and coating segment contributes almost 50% in terms of our revenue, so sir, any plans to diversify and reduce the dependency from the same segment in the near future?
Well, the volume that we cater to in terms of the paint industry, no other industry has such a huge demand for minerals from the other industries in terms of the formulations that they use these minerals in. So that is the reason that the dependency on paints will continue to be the same as it is. But definitely our focus is more now towards the plastics and the rubber industries, and we are developing more and more new products for these industries. So eventually in the coming years, you will see that the growth in the plastics and rubber segment will increase and will lead to an overall shift in the overall mix.
Target that we are catering to?
Pardon?
Any target that we are catering to in terms of, increasing the revenue base from the other segment and reducing the dependency?
Yeah, that will all depend on the approval processes that take place in these industries, because these are all niche products, and the approval times and the trial phases are quite long compared to the regular products that we are supplying.
So what would be the time frames to get the approval?
Well, so there's no specific time frame that I can tell you about it as of now.
All right, sir. So thank you. I'll join the queue then. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Question comes from Aman Jain from Aryan Capital. Please go ahead.
Hello.
Yes.
Yes, sir. Thank you for the opportunity. I just want to understand, so if we see Q3 is a weaker quarter for us comparatively to the other 3 quarters. Q3 is generally a weaker quarter for us, but you have also increased the guidance from 10 to 15% to 15 to 18%. So can we expect the Q3 to see much better growth and any sequential growth?
Are you talking only related to Q3?
Yes, I'm for Q3. Yes.
Yeah, so currently in Q3, the demand, if you look at the H1 comparison, then the Q3 demand is currently slight sluggish. If you look at the FMCG markets, they're all not up to the mark that they were in terms of the market scenario. So, but we are quite hopeful that post-Diwali now the pickup will happen, and we would be on the same path that we are at the H1 level.
Okay. Okay, understood. So I'll run that. Thank you.
Thank you. Thanks.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Amit Agiga from HG Hava. Please go ahead.
Good afternoon. Am I audible?
Yes, sir.
Yes.
Hello. Yes, thank you for giving the opportunity and congratulations for the good set of numbers. My question was with respect to the number of employees the company has and the gender ratio.
Yes, so we have more than 500 plus employees, along with all the staff and the laborers and everyone involved in the company. And our headquarters is based out of Baroda. As of now, I do not have an exact number for the gender ratio, but our team can always get back to you if you drop in a message to our company secretary for the same.
Thank you.
Thank you. Next question comes from Subsha from Ratnatraya Capital. Please go ahead.
Hello, sir.
Hello.
Yes, I wanted to ask first, has the share of imported raw material as a proportion of our total COGS changed, or is it around the 40-60% still?
No, it continues to remain the same.
Understood, sir. Also wanted to check about the proportion, the contribution to revenues from 20 microns nano.
Yes.
What is the number for this quarter?
Hello. So you want to know the total revenue for 20 Microns Nano Minerals Limited?
Yes.
Sir, nano revenue for hello.
Yes.
Yes, Pranit, go on.
Are you talking about nano revenue? Nano minerals revenue for first quarter is around 54 crore.
Okay.
Hello.
He's talking about H1. So that's a 30% growth year on year.
Understood.
Yes.
And any guidance for this?
It will continue to remain the same as of now.
Understood.
For H2. Yeah.
Okay. And two more questions. First, can you provide the breakdown of expenses, the freight or power and fuel cost, what has resulted in the increase in total expenses this quarter?
So basically, as I mentioned to you in my opening remarks, that the raw material cost has increased, which is a major factor, which has increased by more than 1.5% year on year. Mm-hmm. So that is the major contributing factor to the overall expense compared to any of the other expenses that we have in place.
Okay, understood. And last, any particular capex which we are planning to incur?
So we already have planned capex for the next 18 months, which we had spoken about in the last earnings call also, that it is in the range of 70 to 80 crores, out of which 25 crores is going towards the recent acquisition that we have done in Malaysia for acquisition of mines. And there is another capex which will be ongoing capex for 20 microns in terms of the addition of capacities for our current product ranges, and some capex which will be going towards the capacity enhancements for the nano product range, and some capex which will be going towards our new joint venture which is being formed for the construction chemicals with Sievert, Germany. So, and then there's some capex which will be going towards R&D, upgradations of the current machinery, and also some capex going towards buildings and renovations and stuff like that. So overall, we have an 18-month plan for 70 to 80 crores worth of capex.
Understood. And there is no kaolin capex as of now?
As of now, there is only a minor kaolin expansion capex which has been planned, but not in a big way. Yeah.
Understood. Thank you. That's all from mine.
Thank you. Yeah.
Thank you. Next question comes from Rushabh. Next question comes from Rushabh Shah from RRR Investments Advisory. Please go ahead.
Hello. Am I audible?
Yes, sir.
I had a question about the half-yearly results that you have published a few days back. The trade receivables has increased a lot, like from 125 to 160 in just half a year, which is a bit concerning because it has been increasing gradually, and the cash flow from operations is also, suffering. It has been negative half-yearly too. So what are your comments on that?
Pranit, can you answer this for the trade receivables?
Sir, yeah. Sir, trade receivable, so far as our revenue is increased by 20%, literally receivable has been increased. But if you look at holding days, it's not much changes. If you compare holding days with March 24 year, then it is around 63 days. Then there is not much change so far as holding days is concerned. However, in absolute term, receivable is higher compared to last year months. This is because of increase in revenue. Hello. Actually, the holding days is average, but what I'm saying is that it has increased to 160, so the holding days will also increase now because the average will be increased and the revenue has not increased much from like last half. No. If you you compare revenue year by year or compare with last year or current half, then revenue has been increased by 20%. Definitely, you show our result. You can see that the revenue has been increased. The trade receivable has increased by a far more than the revenue. Yeah. Sorry. Yeah, the revenue has increased by 20-25%, but the trade receivables has increased by a much larger percentage. No, not much larger percentage. If you compare holding days, you calculate holding days. I have calculated holding days. In September 4, receivable holding days is 62 days. June is 56 days. For 23, it is 61 days. So there is not much change. Okay. So I think that has decreased the trade payables also. The last 2 years it was decreased by around 50%, and now we are seeing an increase again in that. So like, the credit terms with suppliers are changing again. So far as I'm not getting you properly, but so far as trade payable is concerned, during last quarter, in January, February and March, this MSME Act is imposed. So we have to pay every MSME vendor within 45 days. So trade payable days is constantly decreasing compared to last year. This half year, trade payable also gone down. So far as holding day is concerned. Yeah, so and my another question was that the current other financial assets in the balance sheet, that has been a low amount every year. The highest has been 4 CR. But if we see the half-yearly balance of it, it has increased to 28 CR suddenly. Now, from what I'm aware, historically it has only contained like insurance claims and balance with authorities and one more stuff. So, can you give some bifurcation about it? Are you talking about other financial assets? What? Can you repeat? Yes, current other financial question. Current other financial assets, no? Yes. Yes, madam.
So what I would suggest is that if you can take this question and write it to the senior finance controller, he will be able to address your queries in a much better way, one-on-one.
Oh, okay.
Okay.
So also I find Hello. You are talking about current financial assets where amount of 24 crore is amount receivable for issue of share capital, which we have invested in this September month to our Malaysian company. So the current financial asset is 28 crore compared to mine. Okay, and it is an investment in the Malaysian mine. Yeah. Amount receivable for issue of share capital, that amount is 24 crore, which is not in last financial year. So if you compare amount September 24 versus March 24, you will find it's significant rise. This is because of this investment figure. Okay, and my last question was that I saw that the cash flow from like all cash equivalents, it has been negative this year for the half yearly, and I thought the main reason for that is the inventory build-up. The change in inventory has been negative and the revenue has not changed much from last quarter. So like, why is the inventory building up, and like, are you storing inventory for future demand, or what is the reason for that? Sir, we are carrying inventory. So far as imported material is concerned, we have kept material looking to future demand. We have reserved that material. So that operational cash flow is being used in that inventory, and mainly it is imported material. So the payable period or credit period is also lower compared to domestic material. And most of our operational cash flow is used to purchase this inventory. And so far as demand is concerned, Akhil sir will explain you what about demand and how this inventory would be given to goods.
Okay, that will be all. Thanks for answering the questions.
Yeah.
Thank you. Next question comes from Alisha from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. Sir, first question was the growth that we've seen in H1 of 20% plus. Can you break that down into how much is volume growth and how much is realization growth because of better product mix?
So in terms of volume and in terms of the value, both are at a 20% growth equally.
Okay. Understood. So second question, if you could just help us with the nano revenue and margins in H1.
Nano, as Mr. Pranit just mentioned in his earlier question, stands at 54 crores in H1, which is about almost a 28 to 30% growth year on year compared to last financial year. Then the margins will continue to remain in nano in the same range of 12 to 13%.
And the growth in nano, this is, have we got any major new customers that we've added, or it's just ramping up with existing customers, and how should one work with in terms of growth for nano going forward over the next 2 to 3 years?
So in terms of nano, we have multiple products that we have for various different industries. And as I mentioned to you in my earlier remarks was that there's a lot of time which gets taken for the trials for nano-related products because of the expensive testing that has to be done for these products, and depending upon the industries that are consuming these kind of products. So a lot of products that we had launched in 2022 and 23 have finally got the approvals in 24, and that has been showing the results in terms of the increase in the volume and in terms of the value for these products over a period of time, and will continue to increase because there are many other pending trials which are being conducted by our customers, the long-term ones, and these will continue to get converted in the following year as well as in the next year. And we are also building up on capacities in nano also for the products which are kind of the key ones where we're expecting a better demand coming in, which because nano is basically products are import substitute products, and because of the import sustainability which is not so good right now due to the freight factors and the demand and the supply which is there currently in the global scenario, we would have some advantage on that in the coming quarters and in the future years as well.
What would be your capacity utilization in nano currently?
So it differs from product range to product range. In some we are at 90%, in some we are at 50%. So again, products, different capacity utilization is there in that particular segment.
So, and just with respect to what you were saying, that as the products are gaining acceptance, can this business continue